Hey, Joe Solari here, and this video is a second part of talking about the CARES Act and the economic stimulus package and how, as a small business owner, you may qualify for the different programs. Today, we're going to be talking about the Payroll Protection Plan, PPP. This program opens up on April 3rd. That means they're taking applications. They're not actually putting money out on the street yet. Now, the Treasury Department is running this program, and as you can see the website behind me, I'll show you the links. There's some basic information there on how the different programs are working. And understand they're trying to get this money out really fast, but at the same time, nobody is prepared to put this money out. And at the same time, a lot of these organizations are having their people stay home. So there's some things here that are going to get overwhelmed. I'm going to help you understand what you can do to be prepared and get everything ready, but this is going to probably be a waiting game for most of us. That being said, if you don't get your information in, you're not going to be able to participate in this program. So what's this program about? While the Treasury is kind of taking the lead on it, it will be driven through the SBA, and this will be set up in such a way that the actual loan goes through an SBA approved lender, okay? Now let me talk about that for a second. This gets back to that overwhelm. There's gonna be a lot of people that are coming at this program and are gonna wanna try and get access to this money to continue to keep their payroll and keep their employees on the payroll. The first place you should look to apply to is your existing bank. So if you're a small business, you're a sole proprietor, you're independent contractor, any of these people are going to be able to apply for this program, and I'll go through them and explain when and how each of those different categories can do it. But the best place for you to get approved is going to be where you already have an existing banking relationship. So in my case, it could be Chase Bank. They're an approved SBA lender. If you were with Wells Fargo, if that's where your checking account was, they're an approved lender. So look to those approved lenders. I'm also going to put some links down in the description that are to some other SBA links, programs that are for folks that typically don't have an SBA approved bank. But that's really where you're going to need to go to, and understand that these folks are going to get overwhelmed and they're going to take their existing customers first. So let's go through this small business paycheck protection program. First off, you need to have been in business on February 15th, 2020. So if you were incorporated, you're doing business and you're operating, then you're in a position to get your hands on some of this money. If you just started your business the day after that or just recently, you're not going to qualify for this program. The initial people they're looking to have apply are small businesses. So that's companies, corporations, limited liability companies, S Corp, C Corps. Those are the folks that are looking to have apply on the 3rd. Then they're later going to open it up to sole proprietors and independent contractors. But all of those people are either for-profit or non-profit are going to be able to apply for this program. So what are you able to apply for? And you may have heard about this program and that it's going to be a forgivable loan. Here's how it's designed to work. It's associated with your existing payroll obligations. So what they're going to do is they're prepared to give you a loan that's 2.5 times your average monthly payroll, up to a cap of $100,000 annual salary per employee. So that means if you've got some folks that are making more than $100,000, you're not going to be able to borrow that money to cover their full salary. It's going to cap out at 100. So if you think about that, that works out to be around $8,300 a month. So you're looking at about a $20,000 per employee capacity to borrow. And then it's just supposed to be a short-term thing to get you through the next couple of months. Now, what they're really going to look at is you're going to have to validate what your actual payroll was, and you're going to have to do that with your IRS 940 ones, which is your withholding statements that you put together on a quarterly basis for your payroll. They're going to look at that number. They're going to look, everything here is going to have to be certified by the lender, and that's going to tie off to the loan. So if, let's say you're only paying yourself $2,000 a month on your W-2, then the most they're going to qualify that loan for is $5,000. The other part of this thing is there's a forgivable piece, and the way that they're designing it is that if the amount of money that they provide you, let's say it was $10,000, as long as $7,500 of that goes towards payroll, then the whole amount could be forgiven as long as the other 25% is going to things like rent or utilities or obligations that the business has to continue to operate. And those things have to be things that were established again before that February 15th date. So interesting thing in my case, if I was to get this loan, because I moved my office afterwards, I couldn't get money to pay for my new utility bill because it was established after that date. So that's just how the cookie crumbles. But you can use this money to deal with your interest on your mortgage, your payroll, utilities, essential living expenses that you'd be paying with your payroll. So the actual conditions of the loan are really interesting. First off, it's 1% interest. You don't have to start making payments for 6 months, and you have 2 years to pay this loan off. There are no fees for you to get this loan. In fact, the banks cannot charge you any fees. It's stipulated in the legislation. Anybody that's asking you for a fee, it's a scam. Okay, because even agents that are supposed to be that could be doing this work, like helping you get this loan, they're supposed to be paid out of the money that gets paid to the bank. And the bank will get a sliding scale origination fee on the loan. So anything below $350,000, they're going to get a 5% origination fee. And then the other part of this is those banks then have the ability, they can go sell that loan into the collateralized market. But the big takeaway is that if you're looking to do this, we're going to go through the form in a second. You fill this thing out, you're going to figure out what bank you're going to apply this loan with. You can only do it with one. And once they show you where you can send this material to, you're going to send that application to them. So it's a Treasury Department application form that they'll accept and they'll get approved. Now, once you get approved, you're going to have to provide a lot of documentation. This is an SBA loan, so you're going to have to provide a personal financial statement. You're going to have to provide the incorporation documents, a whole bunch of stuff they're going to ask for, including looking for the material on your payroll. Now, another piece of this thing is that if you let people go in the short term and you're bringing them back on because you now have this loan, you have a specific time to bring them back on, and you have to bring them up to a certain amount of their past salary for it to count towards this forgivable loan. Again, understand with any forgivable loan, that is going to potentially be treated as income. But if these are all getting used to pay your expenses, that should offset that income, so there's not going to be a taxable event anyhow. But understand that at the end of the year, that loan is going to look like money that came in from a sale or any other type of income as far as the IRS is concerned. So let's go to the form, and I'm going to walk you through the form so you can understand how you're going to fill that out and where you can find all that stuff. I'm going to quickly go through this form to help you see the key components that you're going to need to hit here. First off, let's begin with the link on the Treasury site where you can get this form. You want to go do this and fill it out so that it's ready on April 3rd if you're running a company, and it's ready on the 10th if you're a sole proprietor or a contractor. You have your general business information, EIN number if you're a company, your social security number if you're a person. This section here is important for how they're going to figure out the loan. So it is the average monthly payroll times 2.5 is going to get you this loan amount. They want to know the number of jobs that are associated with this loan. And then they're going to want some information about other things that you're going to use the money for. You're going to need to list all of the owners that have 20% or more of the company. And then the rest is pretty simple. It's just boxes you need to tick to explain to them who you are, make some declarations as to what kind of business you're operating and that you're going to qualify for this program with the different things that they're asking here. So just go through that, and then you need to sign it. And this is going to be sent to your SBA lender once they tell you where they want it sent. Well, I hope that helped you to understand the whole program. Again, if you have any questions, please leave them in the comments below. Don't forget to subscribe, because I'm going to be putting out more of this material, and I'm dropping it as soon as I have this stuff figured out so that you guys can get after it and get into these programs, because time will be of the essence.